Well, good morning, everyone. Welcome to our Thursday trading room. Hang on a second. Come on, screen share. So, yesterday was quite the day. Here, I thought for sure after the morning, the market would just kind of continue in a sideways fashion. That was not the case, however. Here, I'll show you on the daily chart, and it will make more sense. This was yesterday. Wow. So before the morning finished, we were toying with the 7,000 range, so we were still relatively high. But the afternoon, the market just got into a bit of a tailspin and continued lower from there. So that definitely puts a bearish bias on this market. And it's likely that, well, I think I would remain probably more bearish than bullish today, even though here to start the morning, we've got a little bit of an uptick. Here you can see the overnight also sort of bearish. Actually, I guess it was kind of balanced for the most part. But our first in sync eagle signal is actually to the upside. So we'll have to wait and see what they do with that. But like I said, given what was going on yesterday, I might feel a little bit better about shorting. Ooh, in fact, I wasn't going to take an early signal here this morning, but the market does seem to have some downside momentum. Here was a number one signal. Let's talk, Eric. More trade. Oh, shoot. And here's one of our discretionary follow-up signals, which I will try to get on board with. And if the market does happen to get back to the hard edge, I think that might offer a better entry opportunity. Oh my, we do have quite a bit of volatility brewing here. Maybe I'll go with plan A and wait a little bit longer. For a moment there, it looked like the bottom might fall out of the market. And here we are once again. We've got ourselves a little bit of a range established. You know, you could buy above that high, you could short below this low. Here, we'll do a little OCO type thing. So we'll get the short order in. I'll get the buy order in. Remember, with your OCO orders, these orders are live when you put them on your chart. So I tend to place them a little further away and then bring them in where I want them to be. Obviously, still very early in the session at this point. I'll have my stop strategy ready. Oh, really? I did not think they would fill me to the long side. All right, here we are at the high. And are they going to push on through? Well, not yet. A little bit of a pushback off of the high of the morning. All right, and here we go again with the 232 signal. Now, I'm a little bit late on this one. Okay, I'm just going to short the next signal. There it is. I'll throw my stops above the high. What I wanted to do is I want to short this 232 right here, 232. The reason being the market did not proceed higher on the breakout. Therefore, it is likely to head lower. It's a little bit late, as you can see. It would have been much more desirable just to punch in with an order there. We'll see if we can't get some follow through now to the short side and perhaps even see a break below the low of the morning. The market's really looking for some direction here. Wow, such volatility. Oh well, got a little bit of profit on that one. Bit of a, well, it's not really a rough start, but not really getting the follow through I was hoping for. Oh, there we go. There's some very quick moves. Here we are back again at the low. And am I going to get a follow-up signal? Well, I do have an opportunity here in the Hawk. Looks like it's going to be a 4-arrow consolidation signal here on the Falcon. I should get a follow-up signal on the Raptor as well. And once again, I think there it is. It's just one of these situations where you're just going to have to jump in. The market's moving so fast. And looks like I took a little slippage on that one. So let's see if I can't get my slippage back. Come on, there we go. And we're going to try to stay 2 swings back. What a roller coaster. We're only 10 minutes in. It feels like I've been trading for half an hour. Okay, got the break even, and now here we go. I'm gonna move into the parabolics. Which are much more aggressive. I could also use the bar high-low, also another very aggressive stop strategy. And got kicked out on this little bit of pushback from the median line. Given yesterday's range, look at how broad all our support and resistance lines have gotten. The ranges here are huge. Yeah, look at yesterday's range here on the day ranger, 1452. So the range is definitely expanding. As you can see, the 30-day range was about 550, approximately 690 for the 10-day range, 750 for the 5-day range. So a lot more volatility entering the marketplace. Well, if I were doing my trade quota, my day would be done. And it would be a decent day today. I think we're up about $400 so far, 450. And we're only about 10, 12 minutes into the day. Yeah, Steven says, well, what were your parting words yesterday? Maybe we'll see 7,000 at some time. Here we are well below 7,000 already. Yeah, for the way the market is moving right now, you really do need to consult a longer term chart like the daily. And here we are back almost to the lows of the spring where the market began. Well, it didn't really begin this rally, but it's been rallying for the last 25 years. But this leg of the rally, it looks like it began around April, May, and here we are already back at the June lows. Now, all the talking heads are going to be running around waving their arms, shouting the sky is falling, but really it's not. It's very likely to see the stock market enter a bit of a broad trading range. And how can I say that? Well, okay. Here, if you've been around trading for any time at all, you've probably heard of a fellow named Richard Wyckoff. And he kind of discovered a bit of a pattern that tends to develop within the life of a market. And he described it this way. Where you have a phase of sideways trading, he called it the accumulation phase. And then there was the markup phase after you left the accumulation phase. And then you entered a bit of a sideways and distribution phase, and then the marked down phase. What tends to happen, though, is when the market leaves this accumulation phase, and we've all seen this happen, is that at first you'll get some really strong breakout bars, right? The market will just take off like a shot. But after that, the market will start to settle in a little bit, and you'll start to get your sideways channel. All right. Then when the market finally tops out, your bars will start doing this kind of thing, where they enter the sideways range again of distribution. Now, it's not always clear. Like, some people will be looking at this and they'll be saying, okay, well, this was probably the distribution phase up here, and now we are in markdown. But if you took a look at this from, say, a weekly or a monthly perspective, you may be looking at it and you may be saying, no, this is going to be our sideways trading range, even though there were some very, very strong moves lower. All right, so it remains to be seen exactly what how big the sideways trading range will be. So that's what we're on the lookout for now. But I do believe, I don't think, while the market is, see, here was the breakout phase moving lower. Now some traders will be thinking, oh, the market's entering a channeling phase. And you know what? To be fair, it does kind of look that way. After which time, I suppose it could enter another accumulation phase. Maybe it'll be a narrow sideways trading range. And then eventually another breakout higher. This is just the way the markets behave. And knowing this in advance kind of prepares you for what you can anticipate. So if over the next couple of months, stop it, we see the market bouncing back and forth a little bit here, say between, what's that, 6,600 and 7,100, then we can probably anticipate a breakout higher and maybe a move back here to around 77. Of course, it's all speculation at this point, but like I said, knowing what the market may do helps prepare you. I was trying to find a breakout zone here. Here was a late one. See, you get the little mini ranges as well. You get the pattern repeating on a small scale as well. So you get the breakout, you get the trading channel, you get the consolidation, you get the breakout, you get the trading channel. This one was very short-lived. You get the consolidation, you get the breakout, you get the trading channel, and so on it goes, right? You get the breakout, and you could just keep drawing it over and over and over like that on your chart. But there will be a big version of it also. Well, and here we are again with a big push off of the low of the morning. Kind of looks like they bottomed out where, around 60, 68.90. Oh, no, got a little bit lower than that. Sorry, 68.70, 72.50 to be precise. And now it looks like it's bulls all the way. Look at that. I don't know, did anybody get on that move? I don't know if Mark's in the room here this morning. Here was a textbook late filter entry signal. Ooh, it does look like it printed a little bit quick though. Wow, am I just going to have to jump on board here any old place? We're up to the primary resistance line now. What a monster move that was to start the day. And we're getting a little bit of a reaction from there that might offer an opportunity to take advantage. Here, our band, look at how big our band is. I don't know though. This is a very, very strong uptrend. I don't know if I want to be shorting into such a strong uptrend. Yeah, way to go, Mark. Mark says, yes, I took that late filter entry signal and one pre-market. So he's 2 for 2 on his trades. That was gorgeous. My goodness, those are the kinds of trades that make trading easy. Market just takes off, never looks back. Oh, here we got another 232 signal. So we got the reverse, the hard edge bounce, the reverse again. Should have just got on board. Had the chance, had the pullback, and I chickened out. Shoot. The challenge right now, of course, not uh, determining the direction, but framing up the trade so the market doesn't hand you your lunch. Because we know from the band counter that the market's pretty extended at this point. All right, back into the hard edge. Okay, here now with the deeper retracement. Mike asks, are both solid lines considered the hard edge? Yes, they are. With the Raptor, we've got two eagle bands. We've got the fast one and the slow one. The slow one is identical to the one that you see on the eagle. But early on, one of our Raptor owners said, hey, you know what? We should really have two bands on there because a lot of times I see the market reacting about halfways. And sure enough, he was right. Oh, come on, you guys and girls. You can give me a second opportunity on this one? Not the best setup. I would rather see this bar turn entirely. Oh my gosh, the slippage here. It got slipped again. All right, I'll bring my break even in. All right, come on, let's take out that little swing high. You can do it. Or maybe you can't. Here we go. Should I try to run this one out a little? Where's the next resistance line? Oh my goodness, I don't think we're going to make it quite that far. All right, Stephen was teasing me about 7,000. Let's see if we can get back to 7,000 today. Nope, not right now. That was just reaching a little bit too far. What big ranges here this morning. So what started off as a fairly bearish looking session has now become a much more bullish looking session. Stinkers. And here we are with another pullback. Okay, I was going to say opening range must be near expiration because we have lost some of that wild momentum that started the day. Oh, getting a little bit more of a break. Yeah, Steven says if someone were a good trader and had a large account this week, they could have made $100,000 or more. He says that's my dream. Yeah, this week has definitely been a fantastic trading week. No shortage of opportunities here. I admit after taking a handful of trades this morning already. I am a little bit gun shy, but we're still seeing the follow through to the upside. Notice, however, how the legs have gotten a little bit shorter, right? So we had this monster move up, then we had a decent move up, but then we got a pullback. Another move up, but no new gains. So we poke a little bit higher and another pullback. Poke a little bit higher, another pullback. Poke a little bit higher and another pullback. So that kind of stuff made me think maybe the momentum was starting to leave the market, but obviously it is not. Steven says just $100 yesterday. Hey, you know what? If I've said it before, and you guys all know how I feel about this, if you can make $100 a day trading, there is no limit to what you can earn. All right, here is a second push opportunity off one of our discretionary signals. Doggone it, that's going to be too far. All righty, well, here we go. Now, this is not an ideal trade. If you're looking for a trade to follow on, this is probably not it. What I'm trying to do at this point is just take advantage of the obvious direction the market is going. I don't think we can deny the market is in a very strong uptrend at this point. The better play from here is to wait for the pullback. You can see our band counter says we're 70 ticks broad again, and we're starting to fire some counter trend signals. But the better plan is to wait for a pullback and try to take advantage of that as the market may consolidate. But I'm going to see how this works here. If I can just grab some momentum off one of our discretionary signals, given that the trend is so strong, or seems to be. All right, I got the break even. Don't flinch yet. Come on, here we'll take you up to 7,000 again. Oh, you stinkers. Oh well, at least got a break-even tag on that. It does look as though we are going to creep up to 7,000 after they knock me out. Shoot. Oh well. Floyd makes a comment here. I've noticed that the chop lately is during the first 15 minutes after the open. I think I'm going to start trading at 650 Pacific to avoid the noise. What do you think? I think that's a great idea. What I used to do before I started hosting the trading room, if I were trading during the day, I wouldn't even come into my office until a half an hour after the open. And that was to avoid the potential of getting stuck in all that volatility. Because let's face it, when the market is unwinding this quickly, you get the fast bars going on, you get excited, and you see the market make a quick move lower, and all of a sudden you're grabbing your sell button, and then what happens? The volatility kicks in and it starts going the other way. So no, I think it's a great idea if you can sit on your hands for the first 15, 20 minutes and just watch. What's going to drive you crazy though, and you can't let it, is you know, you see these moves like this and you think, oh my gosh, I just missed the move of the day. Look at how the market exploded. Why was I not trading? Well, because you know this is a one-off, right? It's going to happen once every 3 weeks, maybe a couple times a month. The rest of the time, the volatility out of the open is going to be insane. And unpredictable. So no, Floyd, I think it's a good plan. All right, so they flinched here just shy of 7,000. Looks like we topped out at 69.94 half. And we've retraced all the way back to the hard edge. Now, what's significant about that is that before this market can reverse, we should see a retest of the high, right? Even though we are looking at some very aggressive selling, we should still see a test of the extreme. In this case, the extreme is the high. Before the market truly sets up for a reverse. So what does that mean? Well, if you wanted, you could just look at arbitrarily taking a buy signal. Here's a buy signal right here. You could set up, even though everything is bearish, you could set up and you could look to buy, hoping to find where the buyers are stepping in and protecting their position. Even before we get the proper trend change signal or anything of that nature. And that time, it worked out. And all we're doing is looking at what the markets have a tendency to do. Right? We've got a lot of room up here to play before the market gets back toward the highs. So that makes buying the market down here a lot more predictable. You know, logistically, it's going to be a lot easier to manage than trying to take a signal, say, that develops up here around 69, 86, 87, because then we're getting really close to a possible retest. Even the one that's developing right here, the trend change signal, while it should at least get high enough to find our high probability profit objective, and I'll just highlight it for you here. You can see, even visually, our profit target is probably somewhere near the 50% level of this move lower. Sometimes there's an advantage to showing up early. You don't have to try to endure all this choppiness. Oh, see, now they're going to test the bottom end before they try to go higher again. All right, well, let's throw that on the shelf for now. They may well try to get a little bit lower, maybe as low as around 60.50 before the buyers show up again, because that's where they put in a bit of a rally before. Right? They took off here from 60.60, but look, this was this zone that we were looking at, or the zone that I considered maybe the market is topping out. Maybe we're losing momentum. So here's the breakout. Now we're looking for the retest. And now we'll see whether or not the buyers are going to support the breakout, in which case we'll be on the lookout for another buy signal as we get around that 69.60, 69.55, 57 zone. All right, so here we are, testing the top end of this trading range. Now, see, here's the issue. Some traders will see this as the top end of the range, and other traders will see this as the top end of the trading range. So it may slip as low as 69.55, it looks like, or it has the potential to slip as low as 69.55. Personally, I think I would put my trading range there, but I'm a little bit more anxious. So once again, the market still owes me, as the way I'm looking at this, it still owes me a test to the extreme, even though technically we've already made trend change signals. Let's see if we get another buying opportunity. Oh, we had one right here in the Falcon, just an arbitrary buy signal. Another one here on the Raptor. And excuse me, both of those, I think, just about to hit their high probability targets, just about, just below there. Oh, Frank says there's 69.37 is a pivot level. And there we go. We would have hit the profit target. Okay, so we've got all the sideways trading, which also suggests a little bit more likely the market will rally. All right, I'm going to try the next buy signal. There it is right there. An early cloud crossover signal, an early number one. And I'm a little bit late to the party. The place to be buying would have been down here, trying to get in early. Okay, well. The second push entry strategy keeping me on the right side of the market. Thank goodness. Okay, this is where other traders will have seen this trading range at 69.55. And we're getting some buying support there. The further they drift into this range, however, the less likely the bulls will be able to respond. All right, well, I don't know if I want to try to buy this again, hoping for that retest of the high. Here we have, just an arbitrary buy signal. Let's see if we get a little bit of a pushback, kind of stepping in front of the train here. No, not ready yet. It's going to be one of these situations where I think I got the right idea. I think, like I said, the market, if we're taking a broader perspective, this wasn't really much of a test of the extreme right here. Although, short term, it was enough of a test of the extreme because look at how far the market's come to the short side. But long term, I think we need a bigger retest. Well, it's holding on just barely. Got to get above this 69.50 hurdle, and right now it's not looking all that promising. I figure I'm going to get stopped on this. And the market did not disappoint me. That's the problem with trying to pick bottoms. You've no doubt heard you can't pick market bottoms, or it's a bad idea to pick market bottoms. And right there, you can see why. All right, won't be doing that again. Be waiting for a proper opportunity. In the meantime, though, it does look as though the sellers are in control. Good question here from Mike. Mike's asking about the Raptor filter. He says, you don't seem to use the Raptor filter at the bottom of the screen. Is it ever used or a reason for its existence? When the Raptor first came out, we looked for a whole lot more confluence between the signals. So in other words, you would be shorting with a red band, you would be buying with a blue band. And if they weren't in sync, then you would not take the signal. Well, it became obvious after a little while that, especially with the counter trend signals, you will never have a blue band. So right there, we had to make a slight adjustment. What the Raptor filter is, it's actually the whole Eagle Trend Trader programmed into the filter. The best way to use the filter is to judge a change in momentum. Now, this morning it's not going to be easy to show you because the momentum has been so strong, both higher and lower. So excuse me here, I'm going to just randomly pull back. And what you're looking for, oh, actually, this is a pretty good spot. When the market seems to be laboring, and Mike, you're right that I don't consult the Raptor filter as often as I should because it is actually does give you some valuable information. But when the market seems to be struggling for direction, you can reference your filter to see the control shifting. So let me just go back here a little bit more. All right. So essentially what you're doing is you're comparing the size of the blocks. So here we had a very big magenta block, and all of a sudden we get a little bit of blue block coming in. So this tells us that there is a shift in the momentum. The momentum is balanced at this point. Notice the size of the blocks are roughly equal. So the bulls get stronger, the bears come back, and they even it out. Here, let me turn this to the hard edge so you can see how it would develop. Okay, so we've had a very strong selling streak. Now all of a sudden the buyers get stronger. So you may be thinking, okay, maybe I'll look to buy. No, the sellers kind of offset that. Oh, here come the buyers again. So the buyers come back. Oh, but wait, here come the sellers. So what you're doing is you're actually just looking to compare the size of the blocks to see if the momentum is building or if it's fading. And at this point, you can kind of say, well, our bearish momentum is waning, isn't it? So we've had a good chunk of selling. The buyers step up. The sellers take it back because it's fairly even at this point. The buyers step up again. Again, it's fairly even. You don't want to, take a micrometer to this. If it looks fairly even, it is fairly even. But now all of a sudden, it looks like the bearish momentum is failing. So I would be looking for this next blue block to be larger than this red block. Oh, see, not very much bullish momentum at this point. So Are the sellers stronger? Well, I'll need to see a red block larger than this blue block. Okay, at this point, I might be saying, all right, it looks like the sellers are still in control. We're in the hard edge. Maybe I'll take a look at taking a hard edge bounce signal if I get like a number 3 signal or something, or just your arbitrary hard edge bounce. All right, so that's how you can use the filter. It's actually very, like I say, very helpful for gauging momentum and shifts in momentum when you think the market may be turning. And yeah, Mike, you're right. I don't consult it nearly enough. So right now, obviously, we've had the big sell-off. Here come the buyers. If we get another little sliver of magenta in here, it may show us the sellers trying to push back, in which case I would look for the buyers to come and once again overwhelm the sellers. But very often what I do is I just concentrate on the signal itself, especially when the market is trending very, very strong. You don't usually need the filter to tell you, yeah, the market's in a downtrend here, or the market's in an uptrend here. I will try to point it out a little bit more, however. Oh, here we're getting that move back now. Are we going to get that retest? Well, it's a good start. Yeah, see, I had the right idea. I was just a little bit too early on it. Oh, by the way, the Eagle filter works exactly the same way, where you're focusing on how the filter is breaking up and how the shifts in it change. All right, let me try this second attempt. Doggone it, can't get it. It's too far away to the hard edge, maybe? All right, let's try that. So we've got the number 1 signal. The early number 1 signal you can see much more desirable. The band's not fully crossed, but 99% of the way there. We got the pullback, we got the signal, we got the follow through. This one, I'm a little bit late to the party, but if it is going to retest the highs, then maybe, just maybe, I can sneak a couple of dollars out of it. Did they slip me again? Yes, they did, but I'll leave it alone. Okay. Whew. Thank goodness that one worked. Here's I love this comment here from Mark because, and I'm not saying this to blow Mark up, but I can see how Mark has developed as a trader. You know, early on, we all start trading from the same place and we all make the same mistakes. That's a given. But this comment here just smacks of maturity. And honestly, I'm not building Mark up here, but it is. He makes a very good comment, and I just want to share it. He writes, I've been doing well with my recently changed strategy to take all-in, all-out trades on late filter entries only, using 5 or 6 contracts per trade and limiting my target to 17 ticks. I'm running in the high 80% range of the trades working out. I might be leaving some money on the table by doing it this way, but I'm making 4-figure days consistently with little effort, taking 3 or 4 trades a day. And folks, that's the secret right there. You know, you don't chase the market around. You find the signal that you can rely on, and whether that means, you know, how I've been doing this morning, looking at what the market has been doing and, figuring I need to see a retest of this high. Therefore, even though the market was bearish, I'll look to be bullish. Or just relying on a high probability signal, if you're using your Raptor, like your number 1 signal, or the number 3 signal, or whatever the case may be. Here in the case of the Falcon, late filter entry signals. The Hawk, you have your first micro macro cross, which is always a high probability signal. But you hold out for the signal, you take your profit when you have it, and Mark's improved his winning percentages by even reducing the profit target a little bit. You need to be careful, though. You don't want to reduce it too much, because there gets a point where your losses start to eat too much into your winners. Yeah, good question. I'll ask him. Dan's asking, Mark, what are you running for a stop? Are you... and in the meantime, I will go over Mickey's question. Eric, can you show us an example of a late filter entry signal again? Absolutely. Here is your late filter entry signal on the Falcon. Ooh. Oh, stop that. Oh, there it is. There. So your late filter entry signal occurs when your filter goes out of sync and comes back into sync. The trend line, however, never changes color. So those are your 2 key components. You're going to find as you follow this signal that the flatter the trend line goes, the more reliable the signal will tend to be. Now that's just a rule of thumb. Here is another one. So the filter is out of sync, comes back into sync, you get your signal. Here's another one. And note how flat the trend line is there. Oh, this one is textbook right here. Oops. What you will note is, as well, is that like any signal, they do tend to get a little bit tired. You don't want to be, your first late filter entry signal is probably going to be the most reliable. The second one is probably going to be okay as well. But if we printed a third one up here, I would start to get a little bit suspect. Because what you're looking at with your late filter entry signal is you're looking at a shift in momentum. You're looking at sellers really trying to get the market turned around. So the Falcon filter, which is actually a measure of momentum, is giving you some bearishness. It's saying, hey, look, some bearishness is going on. But the reason the late filter entry signal works out so well is it's almost as though it's a kick in the pants to the buyers, in this case, the buyers, where all of a sudden it's almost as though they're surprised by what the sellers are doing. So we've had a shift in the filter. Sellers are getting stronger, and all of a sudden it's the buyer's wake-up call. It's like, okay, if we're going to do something, we got to do it now. So the signal prints, and typically there's some follow-through, at least enough to find your high probability profit objective, which for the Falcon is $100 per contract. Now, you Raptor traders need not feel left out because your late filter entry signal very often coincides with the number 3 signal. The Falcon is the primary signal generation behind the Raptor, but it is also infused with elements of the Eagle and the Hawk. That's why sometimes you'll see the Raptor print signals that you won't get on the Falcon. Yes, as Stephen says, great for Mark, but weeks like this last week, the runners can make you hundreds of ticks, not just 17. Yes, it's true. You know, over the long term, here's my philosophy on it. The smaller your account, the more often you should be all in, all out. The reason being, the smaller your account, your focus should be on building your account. When you're trading a very large account, or you're able to trade multiple contracts, it's nice to have a runner in play for those times the market does take off. But bear in mind, statistically speaking, the market is ranging 75% of the time. So that means 3 weeks out of the month, the market will be ranging. 1 week out of the month, the market may be trending well. And those 5 days, that 1 week out of the month, may not be 5 days in a row. They were this last week, but it could be 2 days 1 week and 1 day for each of the weeks thereafter. So in spite of what you see me do in the room here sometimes, it's almost one of these do as I say, not as I do type of ideas where I think in the long term, you'll probably be better served going all in, all out. There's a lot to be said for not getting greedy as well. Yeah, Mark, okay, in response to the question where Mark places his stops, Mark says, I usually go at least 2 swings back with my stop. I limit myself to no more than 5% of my account size. That's higher than I used to have for risk in the past, but it's based on my account size, which I've done well to build up over the last 18 months. I didn't get there overnight. I started with 1 or 2 contracts until I got consistent. I try not to be greedy, but focus more on consistency. And with the huge swings the NASDAQ has been giving lately, I focus on all in, all out for that reason. I pointed out before, well, here's a late filter entry signal right here. I pointed out before that the market, even though the DTS and Raptor tools are both very good at picking up immediate market momentum, they don't always. Sometimes you'll get into a trade and you'll run into this where the market just kind of bounces back and forth a little bit. For that reason, if you go 2 swings back, you'll usually stay on the right side of the market. The reason being, the market may well retest the first swing. At which point, there will normally be a reaction. It is very unlikely the market will move a full 2 swings back without giving you a reaction. unless the first swing is just like a little hiccup, like one of these. That doesn't really count. You actually have to see the market turn. And what happens is when you see the market turn after it violates that first swing, well, now all of a sudden you got some options. You can bring your stops in here now if you're a little bit anxious on the trade, if you think it's not working out well, or it just gives you some confidence in knowing that the your stop is in the right place. Remember, your stop is a safety net. That's all it is. You don't want your stop so tight that the market actually tags you on a little bit of a reverse. Then your stop actually becomes a loss. This is not a loss unless it gets hit. And if you can limit your loss to a certain percentage of your capital, then so much the better. Phil is asking about the band counter. To get the band counter, do I download the Raptor Trader with the cloud version 1.5.2 or Raptor Trader version 2? You know what? I'm going to get you to email Ben. And his email, everyone, is support@indicatorwarehouse.com. But I do believe it is the version 2, the latest one. Or he may have updated both. And here we are. We're sneaking up on 7,000 again. 69.95 was where the market got knocked down before. But we're making progress. All right, gang, I do need to close down the room a little bit early today. I've got an appointment at the top of the hour that I need to get ready for. So we'll hang in here for a few minutes more. But I'm going to have to close up shop a little bit early. Yeah, Mark says, mine is definitely a scalp strategy, but as long as it keeps working, I'll stick with it. It's when I deviate that I get hurt. And I can vouch for that. If I follow the rules, I do okay. It's when I deviate from the rules, when I start shooting from the hip, that's when you run into problems. All right, everyone. I'll see you tomorrow. We'll talk to you then. Bye for now.